Residents of the DRC capital, Kinshasa, say they're struggling to cope with inflation as the weakening Congolese franc has led to higher prices of food and other basic commodities. Analysts say the Congolese franc has lost more than 6% of its value against the US dollar this year.
Africa's leading copper producer has been hit by low commodity prices and cutbacks in the mining sector, which have eaten away at foreign exchange reserves and heaped pressure on the franc currency. Government belt tightening has reduced deficits and helped contain the depreciation of the franc, but IMF warns that spending cuts could depress economic growth.
The strength of the dollar against the local currency happened suddenly and led to the increase of merchandise. The rate has slightly come down, but the price of goods has not changed. We still buy our merchandise at a high price and you have to make a profit, but right now prices remain high and nothing has changed.
We have been suffering as a result of the high exchange rate. We need change because when we come here to the market with a certain amount of money, we are unable to buy anything because all the prices have changed. Prices are high, so the government needs to find a solution.
Congo's central bank intervened in February to reduce the exchange rate pressures by buying Congolese francs and increasing the percentage that deposit banks must keep at the central bank. But the bank's foreign currency reserves are low, covering only about 5 weeks' worth of imports, limiting its current ability to take further measures.
Because of its outward orientation, the Congolese currency is heavily dependent on exterior factors and markets. Remember, we are a country that heavily relies on exports as well as on commodities, which is where we get our foreign currencies in order to allow us to import. The weak structure of the country's economy as well as the current political climate has also added to uncertainty in the market. And all these factors contribute to the weakening of our economy and could lead us into a vicious cycle.
The government said in May that it would be seeking up to $500 million in budget support from the World Bank to shore up its economy. Catherine Omwando, CCTV.